We're diving deep today into a report from BuyStocks.ai called Best Financial Stocks to Invest in 2025. Financial shares did better than the S&P 500 last year, climbing a pretty impressive 31%. Okay, so let's get started with the first company on the list, BlackRock. You've heard anything in finance, you've probably heard of BlackRock.
Oh, yeah, the world's largest asset manager,
Yeah.
with something like $11.5 trillion in assets under management. They dominate the exchange-traded fund space. They've also been expanding into things like private credit and alternative assets, which could be big growth drivers down the road.
And they have that system called Aladdin. It's a risk analysis and portfolio management platform.
Right, used by institutions all over the world.
Yeah.
It's very sophisticated and really gives BlackRock an advantage when it comes to data analysis and risk management. The report also mentions that even though they are a market leader, BlackRock's valuation is still pretty reasonable.
Okay, let's move on to another big name on Wall Street, Goldman Sachs. They had a killer year in 2024 with double-digit revenue growth and a whopping 46% surge in debt underwriting.
Yeah, they're really well positioned to benefit from a comeback in investment banking activity in 2025. The report mentions an expected increase in IPOs and M&A activity, which are major revenue drivers for these investment banks.
And analysts are predicting a pretty impressive 18% annualized earnings growth for Goldman Sachs over the next 3 years. That kind of growth is more.
Now, for something a little different, let's look at Citigroup. What makes this one interesting is they're actually considered undervalued right now. The report points out that the bank is trading at a discount to its tangible book value, which is something value investors often look at.
And Citigroup's CEO, Jane Fraser, she's been making some big changes trying to streamline operations and focus on higher growth areas like corporate payments, investment banking, and credit cards. It seems like they're really working on a turnaround.
Yeah, the report highlights that Citigroup's earnings per share is projected to grow from $7 in 2025 to $10 by 2026.
Yeah.
If they can pull that off, it could be a really good option for investors looking for some value plays.
Okay, so next we have a company that Warren Buffett loves, American Express, known for their premium credit cards and their loyal customer base. American Express has a history of really strong financial performance.
Yeah, one thing that really stands out about American Express is their gross margin. It's consistently been over 63%, which shows you they've got a strong brand and customers are willing to pay for those premium services.
And as the economy keeps growing, American Express is well positioned to benefit from increased consumer spending, especially in that premium segment where they do so well.
Now let's switch gears and talk about W.R. Berkley, an insurance company that's riding the wave of some good industry trends. The insurance sector is in what's called a hard cycle right now, meaning insurance companies are able to raise premiums, which leads to more revenue.
And W.R. Berkley's been doing a good job of capitalizing on that trend, pulling in an 8% annual revenue growth rate. But what's interesting is the report says they're trading at a discount compared to their historical valuation. So that could make them pretty appealing for value investors.
You know what I find interesting about W.R. Berkley? Their focus on those specialized insurance products like cybersecurity and natural disaster coverage. That's where demand is increasing, and it could be a good long-term growth opportunity for them.
All right, let's move on to PNC Financial Services, a major regional bank here in the U.S. They've got a strong presence in some fast-growing states like Texas and the Carolinas, which is a good sign.
Yeah, and PNC's CEO, he's known for knowing how to navigate interest rates, which is super important for banks. They also have relatively low exposure to commercial real estate compared to other regional banks. So that might make them a safer bet in that space.
Next up, New Holdings. They're a leader in digital banking in Latin America. And this is a really interesting one because it gives you exposure to a market that's growing really fast. They're already huge in Brazil and are expanding into Mexico and Colombia.
New Holdings has been seeing some crazy growth in both revenue and earnings, and analysts are really optimistic about the company. They're projecting a 22% upside potential in 2025. So this could be a really good option for investors who are looking for growth and exposure to emerging markets.
Now let's look at a company everyone knows, Bank of America, one of the biggest banks in the U.S., known for being diversified and stable.
Yeah, they stand to benefit from several key trends: rising interest rates, solid loan growth, and a growing wealth management segment. They seem to be doing well on all fronts.
And even with that strong performance, Bank of America is trading at a pretty attractive valuation compared to its historical average. That might make it a good choice for investors who want that combination of stability and value. Let's move on to Wells Fargo.
Yeah, Wells Fargo has had its share of struggles over the past few years. They've been working hard to get back on track, and it seems like they're starting to win back some investor confidence.
Yeah, they had a pretty impressive performance in the last year, with 46% return that beat a lot of their competitors.
The report suggests that their restructuring efforts are starting to pay off. They've got a stronger balance sheet, and their earnings outlook is improving. Plus, they're also benefiting from some easing regulatory hurdles and cost-cutting initiatives.
And for those income-focused investors out there, Wells Fargo is known for having pretty good dividend payments. So it could be a good option for people who want a mix of value and income.
And last but not least, let's talk about Visa.
Yeah.
Visa's a company that really needs no introduction.
Right.
The global leader in digital payments, processing an insane amount of transactions every year.
Seriously, it feels like everywhere you go, Visa is accepted. They've really become the go-to for electronic payments.
Absolutely. And that whole shift from cash to digital payments, it's not going away anytime soon. Visa is in a perfect spot to take advantage of that continued growth.
The report highlights that Visa processes something like $16 trillion in payments annually, which is just mind-blowing. And analysts are predicting a 10% revenue CAGR through 2027.
Yeah, that kind of consistent growth is really appealing to investors who are looking for stability and long-term potential. I think a lot of people consider Visa a core holding in their portfolio.
We hope this deep dive has given you some valuable insights and maybe even sparked your interest in exploring the world of financial stocks.